Good morning and welcome to the webinar. I'm Sean Lyons, Executive Director of the South Dakota Retailers Association. Today's program will take a look at recent sales tax activity in South Dakota and provide an economic outlook for the state. It's good information that can help you in your business planning. Our featured presenter is Jim Terwilliger. He is the Deputy Commissioner of the South Dakota Bureau of Finance and Management and has also served as a state economist with the State Budget Office for the last 11 years. Jim prepares and makes recommendations to the governor and the governor's senior staff on budget priorities and works with the state legislature on all fiscal and budget matters. He is also responsible for estimating all general fund revenue sources, as well as evaluating the performance of the state's economy on an ongoing basis. Jim has a bachelor's degree in mathematics and a master's degree in business administration from the University of South Dakota. A couple of notes before we start the presentation. The phones of all the attendees are muted, so we won't be hearing background noises. We will have a question and answer period at the conclusion of the presentation. You can ask a question at any time by going to the webinar panel on the side of your screen. You should see a questions box. Just type in your question, then click on send. If you don't see the questions panel, you may need to click on the arrow to maximize it. You are also welcome to email questions to us. At the conclusion of the presentation, I'll read the questions out loud and Jim will provide the answers. We'll now turn the presentation over to Jim Terwilliger. Jim, good morning.
Good morning, Sean. Thank you for the introduction, and thanks to you and your team at South Dakota Retailers for your partnership and allowing this time for me to present. It's a great opportunity, and thanks for all the retailers out there across the state for joining in. Certainly a good partnership with the state, and appreciate that over the years. So today I'm going to present some information about the economic outlook, and specifically we're going to review some information on recent sales tax activity across the state. And so we'll walk through. I've got a series of slides with some graphs that'll kind of tell a story of what we've seen recently over the last year or so, and even along the longer term, the last 10 years or so. And so the outline of the presentation today, we're going to look at South Dakota and U.S. economic indicators and trends. Those include non-farm employment, our unemployment rate, non-farm income, and we'll talk some about the agriculture sector in terms of farm income and some of those taxable sales that are directly attributable to the agriculture sector. And then we'll show some of the indicators for the most recent South Dakota forecast that we get from a third party that we work with on an ongoing basis. And then we'll review some recent revenue trends and sales tax activity that we've seen, and I've done some analysis on some urban versus rural type activity in terms of taxable sales. And then we'll talk a little bit about some of the things that we've done at the state level of improving our financial practices, and then we'll summarize at the end. And then we'll open it up for some questions and answers. So this first chart shows monthly non-farm employment levels, and all of these charts that I'll show here, the next 3 or 4 charts, will kind of show South Dakota, the number of South Dakota jobs, South Dakota represented by the blue line, the United States represented by the red line on this chart. The United States measured on the left axis, and so just focus on that red line for a second. This goes back to 2000. And so these are the monthly non-farm employment statistics. If some of you listen to the jobs report that comes out kind of the beginning of every month, this is that statistic, and it shows how the recession impacted employment on a national level, greatly decreased from about early 2008 through 2009 during what many refer to as the Great Recession. And so we on a national basis, we saw about a 6.3% peak to trough decline in U.S. employment. And so you could see it topped out at 2008, it bottomed in 2010, and it took about 6 years, not until about 2014, until the United States economy regained all those lost jobs in totality. And since then, we've seen a steady increase in the number of jobs in the U.S. economy. And now looking at the blue line in South Dakota, that's measured in thousands of jobs on the right axis. And so you can see even in South Dakota, we weren't impacted by the recession as much. We peaked around that mid-2008 timeframe. We were impacted by the recession later than the United States. And we only dropped about half as much, about a little over 3% from peak to trough. And so in relative terms, the recession that went from December 2007 through June of 2009 affected South Dakota about half as much when measured by the number of jobs lost. Of course, then South Dakota, since about 2010, we've been continuing to increase in employment. We regained all of those lost jobs by about 2012, so a couple years earlier than the U.S. economy. That's represented, the peak to peak is represented by that dotted line on the graph. And since then, we've been steadily increasing employment at a pretty steady rate through the activity, even through recently in 2016 and 2017. And so you can see that historical information. In 2016, the most recent annual data, we added about 1.1% in terms of number of jobs. And we continue to see that year-over-year increase. Last couple of months have been a little soft. You see that denoted by the right-hand side of the chart there. This next chart, chart 4, is non-farm employment growth, and it's measured on a monthly year-over-year percent change. So it's the same statistic, just showed us in a different way and on year-over-year percent change. And so interestingly enough, looking back over the last 15 years or so, South Dakota and US are fairly correlated. 2000 through 2006, pretty similar growth rates. And then that 06 to 08, South Dakota was growing at a faster rate. And then during the recession, we weren't impacted quite as much, although we did see declines in employment in South Dakota. And then since about 2010, we've been experiencing kind of a steady growth around that 1% range for South Dakota, which is the blue line. And then the U.S. economy has been growing at a little bit faster pace than the South Dakota economy. Part of the reason of that is we didn't lose as many jobs during the recession, and so in percentage terms, the U.S. economy has recovered a little bit faster than the South Dakota economy. Most recently, in July, for South Dakota, on the right-hand side, our non-farm employment was up 0.4%. The last couple of months, as I mentioned, our year-over-year growth rate has dropped off a little bit. We'll visit a little bit more in detail that later, but still growth year-over-year, and so we still see a positive trend in terms of our employment growth across the state. Okay, this next chart covers the unemployment rates. Again, historically, U.S. represented by the red. Going back to 2000, you can see in the 2001 recession, the U.S. unemployment rate went up to about 6%, came down a little bit, and then, of course, in 2008, 9, and 10 was elevated up around 10% at the peak, and then since that time has steadily come down. Right now, the U.S. unemployment rate is for July of 2017 was 4.3%. And so looking at South Dakota, our unemployment rate in comparison to the U.S. has been historically much lower. We saw an increase up around 5% during the recession, and that's steadily come down to hanging right around 3% the past few months. In July of 2017, the most recent month that's available, we were at 3.1%. So it's ticked up a couple tenths of a percent the last couple months, but nothing to be certainly alarmed about in terms of the overall economy. Okay, moving on. This next chart shows the growth rates of non-farm income. And this is measured quarterly on a year-over-year percent change. This information comes from the Bureau of Economic Analysis and shows the U.S. compared to South Dakota, and pretty similar growth rates. If you look back to 2000 through 2007, South Dakota has been a little bit higher. Of course, both South Dakota and the U.S. were drastically affected by the recession. We saw declines in 2009, 2008 timeframe, and then things bounced back. We were positive around that 4% growth range in 2010, 2011, 2012. Interestingly enough, in 2013, we saw a drop in 2013 there. You can see on the graph where we had several quarters of negative growth. And so that's interesting, but the reason for that is, if many of you recall, back in 2011, during this kind of the stimulus time frame, the employee share of payroll taxes were cut by 2% in 2011 and 2012. And so the employee's contribution to Social Security went from 6.2 down to 4.2%. And then that tax rate actually went back up to 6.2% in 2013. And how this data is calculated is any government contributions to social insurance are a deduction. And so since that tax went up, it caused a decrease in our non-farm income in 2013. Since that time, 2014, 15, and 16, we've had actually pretty decent growth rates, up over 6% for a couple of years, and then most recently trending around that 4% range for 2016 and the first quarter of 2017. So this data runs through the first quarter of 2017. So certainly a positive indicator in terms of our non-farm income. Okay, moving on. This next chart breaks down our employment, our total non-farm employment across the state. And it breaks it out into the specific categories, including your construction, manufacturing, and your trades, information, financial activities, and so on and so forth. And what this does is this compares July 2017 to July 2016. These are all seasonally adjusted. And so what that means is the Bureau of Labor Statistics that produces these employment estimates, they do a seasonal adjustment to try and take into account the differences in the seasonality of some of those employment sectors that see swings for the different seasons. So an example would be construction, where you have during the summer months in South Dakota where we have more construction jobs, and then in the winter months you have less. They try and do a seasonal adjustment to take that into account. Now, it's not always perfect. Sometimes you'll see different aberrations over the years when you study this data, and so it's not perfect, but they do the best job that they can. So as I mentioned, in July 2017, we were up 0.4% over July of 2016, and that's an increase of about 1,600 jobs year over year. A few of those different sectors are lower than a year ago. The bigger one being the mining, logging, and construction. Those would be mostly construction jobs, the biggest piece of that. And that one's kind of interesting. We had seen some steady gains in construction employment, but I would also mention a year ago we did have some big construction going on in terms of there's a pipeline being built across the state, and so that kind of inflated those numbers from a year ago. And so we're comparing to probably a high number from a year ago, and so we're down a little bit in 2017 in terms of construction. Manufacturing, we're off a little bit, 800 jobs from a year ago. Your retail jobs are down from a year ago, about 1,400, and then your professional business services are down a little bit from a year ago. Some of the ones that are up is your wholesale trade, transportation utilities, your financial activities, health and ed services continue to see gains. Then your leisure and hospitality is up pretty good, pretty healthy, with 1,400 jobs. And then your other services is up, as well as government is up a little bit. And that would include state, local, and federal government type jobs. And so overall, certainly it's not positive across the board like we would like to see, but there's different things that are affecting some of those sectors. For example, manufacturing, we've had a really strong dollar nationwide. That's one of those sectors that can be more impacted by the national economy and maybe even the value of the dollar compared to other foreign currencies that is probably impacting some of that manufacturing employment sector at the current time. And so overall, positive, but it's certainly not clicking on all cylinders like what we would like to see, but still steady positive growth overall in terms of the total non-farm employment. Okay, this next chart, as we develop forecasts for the state budget, we work with a firm called IHS Markit. And they're a global firm that does different forecasts for many states. They also have other different business sectors that they're involved in across the world. And so on a quarterly basis, they provide a custom forecast for the South Dakota economy. And we review that forecast. The process typically would be as we get a forecast like is what is shown here. We would review that forecast with an advisory group that I work with that's called the Governor's Council of Economic Advisors. And then from this forecast, we had to make adjustments to it based on what we know about what's going on in the South Dakota economy. And so this is a forecast that comes straight from our consultant. And so it shows real GDP growth. We've got 2 years of actual, and then forecast for 2017 and 2018. And then on the far right, an average growth rate from 07 through 2016 to kind of give you a comparison. And so just looking at a few of these indicators, real GDP growth, they have us forecasted at 3%, 3.1%, 4% growth, which is probably a little bit on the high side. That's probably a little overly optimistic. And so that's something that we would review with our Council of Economic Advisors and make some adjustments to that forecast before we would use any of this economic forecast to project any of our tax revenues that would come in. Non-farm employment, they are estimating 1.3% and 1.1%. That's kind of has been in the trend that we've been running at, although most recently it's been a little bit softer than that. So that might be one of those indicators that might need to be softened a little bit too. Non-farm income is in that 3.7 to 4% range. And so that seems reasonable based on what we've experienced over the last few years. Housing starts, we're right at that 4,600 level projected for 17 and 18. We continue to see housing that's pretty healthy. We had a good year in 2016 at 5,300 housing units. And so it appears to be down a little bit from that, but as you can see from 2015, we went from 4,100 up to 5,300. And so it'd be kind of in the middle of what we've seen the last couple of years. So still relatively healthy housing and construction activity. Then the unemployment rate, they have us projected right around that 2.9% rate, which is similar to what we've experienced so far this year, although it's clicked up a couple of tenths, but doesn't appear to be anything to be alarmed about at this point. So that gives you a flavor of the overall forecast from an independent source. I would tell you it's probably a little bit more optimistic than I would use for a forecast for our tax revenues. And so we would adjust this a little bit before we would do some of those forecasts for the state budget. But overall, I think the point is an independent source looks at our economy, is anticipating continued moderate growth overall in the South Dakota economy. Okay, now we're going to shift gears and we're going to visit a little bit about the agriculture sector. And so this chart shows 4 different price measures of commodities, being corn, wheat, soybeans, and feeder cattle. The crop prices are actually prices that are received by South Dakota producers. This information is available on a monthly basis. It's released by the South Dakota Ag Statistics Office through or the National Ag Statistics Service, commonly referred to as NASS. And you look at this and it kind of shows the prices back to 2006, so just about a 10-year look back. And the story here is, if you look at corn from 2006 through 2010, at one point it was over $4, but it was kind of around that $3 in 2010 and 2011. And then we saw prices spike up over $6, 2011, 2012, 2013, for kind of a sustained period. And so you had a lot of farm income that was made during that time frame. And then since then, those prices have dropped off. 2014, 2015, right around that $3 or a little over $3 a bushel. If you look at that, that's really at a 10-year low, that $3 per bushel. And so that's kind of the story in the ag economy, if you will, over the last 5 years, is these decrease in prices. Similar with wheat. Wheat was up over over $9 at one point. Now we're sitting here right around that, $4 range on wheat. And so again, it's, at about a 5-year low for wheat. Soybeans, same story. We're basically at a 10-year low in terms of soybeans when they were up around $15 a bushel for several years. Now it's settled around that, $8.50 to $9 for soybeans. Feeder cattle, a little bit different. The livestock prices did bounce up quite as high as crop did for such a long period of time, but we did have a run up in 2014 and 2015 to where feeder cattle got prices were really strong, up around that $220 per hundredweight. And since then it's dropped off and it's kind of trended around that $140 range. And so that's come down as well the last few years. And so this kind of tells you the story of the ag economy and why the ag economy and the income in the ag economy has come down from those big years that we had. So with that in mind, this next chart charts out South Dakota farm income, and it goes back to 1982 to kind of give everyone a historical perspective. This is essentially net farm income. It's measured by the Bureau of Economic Analysis, and it gives you kind of a historical perspective. And if you look at the chart, you can kind of pick out the drought years on the chart as well. Look at a drought. We had a drought in 06. We had a drought in 02, where we had low income years in terms of the farm economy. Probably 95 looks like a low year. And so if you kind of see the trend from about mid 80s up through the early 2000s, say 2005, there's a steady upward growth trend, if you will, in terms of farm income. Fluctuates anywhere from $1 billion to $1.5 billion, South Dakota. Well, since from 2007 up through 2013, 2014 was really a boom in terms of the ag economy in South Dakota and in the whole Midwest, to where we grow a lot of corn, soybeans, and those type of things. And so you had multiple record years, 2008, 2011, 2012, even in a drought year in 2012, prices were really high, so it was still a strong year of farm income. 2013, a couple of those years were right close to $3 billion, over $3 billion, over $3.5 billion. And so that farm income almost doubled for some of those years. And so that generated a lot of additional economic activity, especially in the rural areas of our state. And that had a profound impact on our budget at that time as well. And so next chart adds a red line and then axis on the right side of the chart. And so what this represents is the estimated sales and use tax that's collected by the state on farm equipment purchases. And so again, you can look at just a steady trend from the mid 80s up through 2005, 2006, maybe 2007. And then from about 08 through 2013, 2014, that time frame, it's almost an exponential growth rate in terms of we went from collecting around that 18 to 20 million to almost 45 or over 45 million. So it doubled within a pretty short time frame. And that was not only fueled by record farm income growth that we saw, but you also had a lot of tax advantages that were implemented during the recession in terms of bonus depreciation, Section 179 deductions to where you could deduct up to a $500,000 purchase. And so that fueled a lot of those purchases as well. Well, certainly we know kind of what's happened since then is prices came down, farm income is lower, and so hence those purchases of equipment, we've fallen from 45 million down to that mid 2020 to 25 to 30 million dollars last fiscal year in fiscal year 17. And so, but that growth rate has flattened out. And so, you know, the last few months it appears we're getting closer to a bottom in terms of this specific area. And so it kind of shows you what's gone on in the farm economy during the recession. It was very helpful. It was very helpful for our overall economy and the state budget during the recession of 09 and 10 and 11. And so it really stabilized our budget as compared to some other states that didn't have as big of agriculture presence. Since then, it's kind of hindered us to where the farm economy and the spending in the farm economy has dropped off. And so, you know, we're a couple years into that cycle, and, you know, I believe we're getting close to a bottom in 2017. Certainly, the drought that we've experienced in this year in some of the areas of the state hasn't helped by any means. I would say, though, there are some concerns that that'll impact our economic activity the next few months, or it has already. We haven't, due to just a little bit of a lag in how we collect the tax, we haven't seen it in our sales tax yet, although I anticipate we will see it a little bit. But with that said, on the impact of the drought, there is a protection in place in terms of crop insurance, and that's heavily subsidized by the federal government. So most of your producers out there have crop insurance at a certain level, and so that is a safety net in place that prevents a really drastic loss in terms of income, primarily on the crop side. And so that'll limit the downside effects of the drought in 2017. And if things come back in 2018 to more of a normal production year, I would anticipate that in 2017 will kind of be the low in terms of the cycle, in terms of the farm economy, and then we'll start to see some marginal improvements in 2018 and 2019 and go forward. One other point I'd like to make is when we saw those crop prices go up, a lot of the input prices were going up as well. Cost of machinery, cost of land, rent, fertilizer, seed, those types of inputs all went up when those crop prices were going up. And as prices have come down, the input prices have been sticky and they haven't come down as fast. And so depending on your unique situation, you know, some of your producers will be in a cash flow negative situation just because some of those input prices may be exceeding the price that are being received right now, specifically for corn and soybeans and those types of things. And so there's still some adjustments going on the input side in terms of some cash rents that are coming down a little bit. the price of land is softening a little bit, and so that takes some time to work its way through the economy as well. Okay, now shifting away from the farm sector, now we're going to focus a little bit more on the sales and use tax collections. This chart I'm showing now is kind of quite a bit going on in this chart, but it shows the 12 months of fiscal year 17, and the state runs on a July through June fiscal year. And so we just recently completed fiscal year 17 on June 30th, 2017. And so on the left side, those 12 blue bars show the monthly growth rates measured on a year-over-year basis for 2017. In addition, it excludes the rate increase. Of course, we all know the sales and use tax went from 4 to 4.5% for fiscal year 2017. In this data, I ferreted out that rate increase, and so we can show it for comparison purposes. So this is essentially would be like a taxable sale comparison. And so, for example, July of fiscal year 17, the far left-hand side of the chart shows was down about 1.6%, and that's compared to the July from the previous year. And so we're down 1.6% in July. August was an awful month. We were down over 7%. September, slightly positive. And then we had a string of negative months through the fiscal year through April. And then May, slightly positive. June was right about even with the previous year. And so the red line shows the year-to-date growth rate. And so if you follow that red line as it moves through fiscal year 17, we essentially finished the year down 1.8%. That excludes audit collections. Try and ferret that out because it's not a true economic indicator if you include that. And so it was, fiscal year 17 was definitely a challenging year. We didn't anticipate that we'd be down almost 2% in terms of our taxable sales. But a lot of it, and we'll discuss a little bit some of the reasons why. We'll get into that a little later. But then in July, the first month of fiscal year 2018, we were up 5% the first month, and so we had a pretty strong month. Of course, these are collections, the month they are collected, and so that 5% would have been from June activity, those sales that actually occur in June. They're remitted, as you all know, to the state the following month in July, and so that was up 5%. That was above our most recent legislative adopted estimate by a little over 3 million. We need about a 4% growth rate, which is represented on the right-hand side by the green bar, to meet that adopted estimate. And so it was a good start to the fiscal year for us in terms of the sales tax collections. And so August data will be available sometime the first week in September. And so we hope we can continue that type of a trend. Moving along, there's a lot of information on this particular slide. Not going to go into detail on each one of these sectors, but what this slide does is it breaks up taxable sales by major group, by SIC group. And the top couple, like miscellaneous retail, for example, this would include more of your specialized type retail stores, such as clothing or bookstores. And it also includes the majority of your machinery and implement dealers in the state. And so this compares the full fiscal year 16 taxable sales to fiscal year 17, and then you have a percent change. So in that particular miscellaneous retail, we were down 6.7%. Most of that is attributable to the decrease in our farm equipment sales during the state. And then the far right-hand column gives you kind of an average growth rate from 09 through fiscal year 16 to kind of compare where we've experienced it. So looking down through here, general merchandise stores, those would be stores that offer a larger variety of products. Those are up 1.1%. Then your food stores, more of your like grocery store type stores, down a little over 2% for the fiscal year. Then you go down through the different sectors, you can see some of the growth rates or some of the declines. All in all, our total taxable sales, a little bit different measure from what I presented earlier, was collections was down 1.7%. And so certainly not the growth rate we want to see in terms of the state budget. So we did have a challenging year in fiscal year 2017. Anticipate that to start to turn around a little bit for fiscal year 18 that started in July. So we'll keep going and see how that plays out. Next chart, I broke up our taxable sales into 3 different groups. And I want to present this because it kind of tells a story. And the 3 different groups includes the largest 10 cities taxable sales, of where up to the 2% municipal sales tax rate applies. Then all the other cities in South Dakota taxable sales into the second group. And the third group is basically the rest of the taxable sales that don't fit in the first 2 groups, where basically the only state rate applies, only the 4.5% with no municipal rate. What I did is I took all this data and I smoothed it using a 12-month moving average, and then I compared the growth rates over about a 10-year time frame. Here's the breakup of the taxable sales. The top 10 cities, this is the scale of the graph is a little misleading. The top 10 cities make up about 60% of our total taxable sales in the state, which is represented by the blue, 60%. The next 20% are taxable sales that incur in all the other cities that apply a municipal sales tax. And then the green, the other 20% at the top, is those taxable sales where the state rate only applies. So it gives you an idea of the mix of the 3 different groups. Okay, this first chart, this shows historical growth percentage measured left axis back to 2006. Again, the data is smoothed out, 12-month moving average. You can see the decrease from the recession. Then we bounced back pretty strong in 2011. Then from 2012, 13, 14, 15, kind of trending around that 4 to 5%. But since 2015, we've kind of seen a steady decrease in terms of that 12-month moving average. Now we've been a little bit negative. And this is the statewide total, the black line. Then I did the same thing for the top 10 cities. Taxable sales, again, this represents about 60% of the total taxable sales. You can see how that compares. I guess the story is there's been a break since 2015 where in the top 10 cities have been performing better than the statewide average. Hasn't gone negative yet, and so in the more urban areas of the state are performing better than the statewide on average in terms of taxable sales, which would make sense given the challenging last couple of years in terms of the ag economy. Small cities, taxable sales, added by the red line here. You can see similar pattern, didn't fall as much in the recession there in 2010. Similar growth rate to the statewide average. But since, the last couple years here, the smaller cities have been performing at about the statewide average. And so they're down a couple percent here. So not performing as well as some of the larger cities in South Dakota. Next, the green line, much more volatile. Again, same methodology. And this would be those taxable sales that only the state rate applies to. And so this would be, a big portion of this would be your equipment spending. And then you've got a lot of volatility. Sometimes you'll have a big project that comes in, for example, a wind tower that may install a bunch of wind turbines in a certain part of the state that only the state rate applies, and so you can have some volatility. But the story would be since mid-2014, we saw quite a bit of decrease, and in 2015, 2016, 2017, several years of decreases in a row of the state rate only taxable sales, more of the rural areas of the state, and the equipment sector year over year decreases, and so that's pulling that statewide average down at the current time, of which mostly I believe is mostly attributable to that decrease in spending in the farm sector that we talked about earlier. So to kind of summarize and start wrapping up what we reviewed, these this slide shows the three biggest reasons that I believe that have contributed to some of our recent weakness in our sales tax that we experienced in 2017. First being lack of inflation is providing little to no price increase in our taxable sales base. And so in some cases, we've been seeing price decreases. Some of your food prices were lower year over year for many months in 2017. And so when you don't get that natural, normal, say 2% increase in your, just in normal prices and inflation, and if that's zero, if it's flat or maybe only up 0.5%, you don't get that normal inflator in terms of your sales tax base. That's the first one. As we visited about earlier, the drastic reduction in farm incomes caused a decline in capital spending in that machinery and equipment in the ag sector. That's had a direct impact that we can measure from some of the equipment spending, and it also has an indirect impact out in those rural areas of the state, and to some extent the whole state as a whole. The ag sector is still a big part of South Dakota's economy, and so even though we've continued to develop our services sector and our economy continues to diversify, the ag sector is still a big part of South Dakota's economy. And then thirdly, although we've had a lot of progress on the e-commerce front, that we're still seeing some leakage in terms of e-commerce activity. Just for example, so in February 1st, Amazon became licensed in South Dakota to collect and remit. Of course, that's for those true Amazon products that go through the Amazon distribution network. Although we're still not collecting all of those sales, some of those third-party sales that are on the Amazon platform aren't necessarily collecting or remitting in totality. So we still have a lot of progress to make. We also continue to pursue that e-fairness taxation on many fronts. As many of you know, we passed the legislation in the 2016 session. I shouldn't say we, the legislature passed and the governor signed, and required remote sellers with more than $100,000 of gross sales or 200 or more transactions to collect and remit sales tax. Of course, that was designed to initiate litigation. That litigation is scheduled for oral argument in front of the South Dakota Supreme Court next week. And certainly the ultimate goal is to eventually go in front of the U.S. Supreme Court to challenge the Quill case. And so we'll see how that plays out. You know, we've been asked many times, well, what does that mean in terms of dollars? What does that mean to the state budget? And last year, I did a lot of research with the Department of Revenue. And at that time, we were in that $50 million range. That would be state and local taxes on an annual basis. We continue to review that as we move forward to see if that is the right number. It's a challenging estimate to come up with because a lot of those taxes have never been collected before, and this has kind of evolved over time. But we're right on around that $50 million state and local, with the state being that 30 to 35 million, the local piece being that $15 million range. And so we'll see how that plays out in terms of this in front of the South Dakota Supreme Court next week. And we're hopeful that that'll continue to move its way through the court system and ultimately level the playing field when it comes to e-commerce activity. So to wrap things up a bit, to summarize, the U.S. economy expected to grow moderately 2017 and 2018. We continue to see this growth rate that's still positive, certainly not exciting by any means, but in that 2% range in terms of GDP growth for the U.S. economy. South Dakota economy, we still continue this similar growth that we've experienced probably the last couple of years. Kind of unexciting, but still positive growth. We've got some challenges in the agriculture sector. We talked a little bit about the drought. I believe that 2017 will be a low in terms of the cycle, in terms of the agriculture sector. The drought, we are concerned about the drought. There will likely be some negative impacts from it, but that safety net from the crop insurance helps limit that downside. And if it's, in many producers' minds, if it's viewed as it's kind of viewed as a one-time event. And if 2018 we come with a normal production year, agriculture producers tend to spend their money on what their long-term view of their income is. And so a one-year downswing shouldn't have a huge negative impact. But if you had another drought year next year in 2018 and then another one in 2019, certainly that would start to have a bigger, broader impacts across the economy versus just a one-year drought. Recent sales tax collections have improved, but we still anticipate a challenging budget cycle for 2019. We don't see that this economy is going to take off and grow like gangbusters by any means. And so we're watching things close. It was good to see we had a good month in July, and so we'll continue to monitor that closely as we move forward. Just to shore things up, wanted to visit a few things that we've done at the state level in terms of improving financial practices. We've got a lot of metrics that are available out on our website, which is bfm.sd.gov. We've got there's reports out there on revenue collections, sales and use tax collections. There's reports on monthly expenses. There's reports out there about economic indicators, and so there's a lot of information on our website. We've done some long-term financial planning the last few years. Faster CAFR, that's our annual report that we have to do each year, our audit annual report. And so we've got that done within 6 months of the close of the fiscal year, which was a big deal for us. We've done some different things with risk management in terms of captive insurance companies. And so that's been good for the state. And we're continuing to develop our internal controls to improve our financial practices. All this does have an impact. We are now AAA rated by all the rating agencies, the major three being S&P, Fitch, and Moody's. Many of you may or may not know that the animal disease lab was approved by the legislature this year, and so we went out and we issued bonds, and so we got our AAA rating affirmed. We're able to cut 2.5 years off of our payment cycle from 25 years. We shortened it down to 22.5, and we got a strong credit or a strong interest rate at about 3.8%. And so that saves the taxpayers a lot of dollars over the long term. And so we're fortunate and happy, excited about that. So I will wrap it up there. For further information, you can go out to our website. There's a phone number. You can give me a call if you think of something or you want to chat about anything specifically. You can certainly give a call at any time. There's my email address. If you want to know thoughts about anything or have a question about anything on the presentation, you can certainly drop me an email at any time, and I'll wrap it up there. And thanks everyone for participating, and I'll stand by for some questions.
Thanks, Jim. A really great presentation, and I should mention that Jim provided a similar presentation to our board of directors at our recent June meeting, and we thought it was a great opportunity to share this information with a broader audience. So we appreciate you taking time to do this. Let's go ahead and take some questions. And again, I would remind everyone that if you have a question, just go to that questions box, type in your question, and click on send. And we'll try to go through and answer. We've got a few here, Jim, and if you have anything else you want to add at the end, you can do that as well. First question is, the slide that showed the baseline economic forecast for South Dakota included the projected South Dakota unemployment rate. Are the statistics available that show projected employment or unemployment rates for specific industries, such as retail trade?
Yeah, that's a good question. I do have, in the model that I get, there is some of those employment sector levels for those separate categories. unemployment rate, I don't have it by sector. It's just a statewide unemployment. And so there is some data in that specific sector rate. We don't typically publish it because a lot of this data comes from our consultant, and so it's kind of proprietary information a little bit. But if someone wanted to reach out and visit about what some of those sectors, I'd be able to visit about that a little bit on a one-on-one basis.
Next question is, I'm curious to know how difficult it is to make accurate economic projections in South Dakota because we are so dependent on agriculture and the ag economy can vary considerably from year to year.
Good question. Typically, when we do projections, I don't spend a great deal of time doing projections, for example, for farm income, because it can be so volatile, and you can't project the weather 16 to 18 months in advance. And so there's no way I'd be sitting in my chair today projecting what the weather will be like in 2018. It's just a difficult thing to do. But so is what we do is we do the projections on the non-farm employment and income, and those are pretty steady over time. And there is a relationship between taxable sales and that non-farm sector over time. And I think if you think about it, and you think about our sales tax base, and part of my job is to forecast sales tax collections because it's the biggest revenue source for our state general fund. A lot of the activity in the farm sector, I'm talking direct activity, is not taxed. And so you have your tax for your machinery and equipment is about the only one that is taxed directly, but all of your inputs such as your chemicals and your seed and your rent and that type of thing is not taxed. And so while our ag economy is a big presence in South Dakota, it's not heavily taxed either. And so even though we have these wild swings in the ag economy, it doesn't necessarily mean a wild swing in our taxable sales, if that makes sense. And so fortunately, I think whoever, over the years, when our broad tax base is in South Dakota, that it's not heavily dependent on the ag sector. And so we actually have one of the least volatile revenue streams in the country. There's been studies done on it to where our sales tax base, since it's broad, but it doesn't tax highly in the ag sector, is actually very stable over time. And so we're fortunate that we don't get these wild swings in terms of our taxes.
Next question I have here, Jim, says, I don't sell fuel, so I'm not sure what taxes apply to those sales, but how have fluctuating gas prices affected the tax growth rate?
Okay, so with the fuel taxes, just taxed with motor fuel tax, and the sales tax doesn't necessarily apply to that. And so that motor fuel tax goes to support a lot of the things at DOT with road construction and that type of stuff. And so when gas prices are lower, certainly that fuels a little bit more consumption. And so, then the DOT has some more money for roads and stuff like that. But indirectly, when we have lower gas prices, it also encourages more travel in South Dakota. And so those folks in the tourism industry, typically you like to see those lower gas prices because that encourages a little bit more travel. The consumer has a little bit more money in their pocket, discretionary income to spend to travel and for those types of things. And so that can be certainly a help for the tourism recreation industry with the lower gas prices.
Next question, Jim. What percentage of the state budget comes from sales tax?
Sales tax makes up about 63% of our ongoing general fund revenue base. So it's by far the biggest one, a little over 60%.
Jim, can you talk just a little bit briefly? This wasn't a question that was received, but I think it'd be good to share the Governor's Board of Economic Advisors and the role that they have in advising the governor.
Sure. So with the Council of Economic Advisors is an advisory group. We typically meet quarterly. We're actually having a meeting tomorrow, and we review a national economic forecast. We talk about it. We have 12 members that come from across the state, and the membership consists of, we try and have a broad variety of sectors, being agriculture, tourism, those type of things, and then also geographically. And so we have folks from West River, East River, that type of thing. And so we try and get a broad group that has, involved in business and the business community and so on and so forth, then they advise me on, hey, this is what we're seeing and hearing and what's going on out in the economy. Here's what's going on in the tourism, here's what's going on in agriculture, here's what we see and hear. And so they help me develop the best economic forecast that I can, and then I'll in turn turn that economic forecast into a forecast for all the taxes that essentially flow to the general fund. So they're an advisory board essentially to build the best economic forecast that we can as we make these budget decisions throughout the year on an ongoing basis.
And you've kind of touched on this one previously, but a question that we'd received prior to the webinar: what impact can we expect in rural America from the drought this summer? Which you've touched on that, but I think the second part of that question was, how has the new administration in Washington impacted the economy here at home?
Sure. And so in terms of, I think the administration in Washington, President Trump, it's still a little early to tell what the broad economic implications are of some of the things that have gone on. I'm a little disappointed, like with the Trans-Pacific Partnership Trade Agreement. Would have been nice to see some of these trade agreements getting put in place that can help South Dakota, being a real state, exporting a lot of our ag commodities. But hopefully we can negotiate some of those as we move forward. Certainly, there's probably some uncertainty out there, so that probably holds back some of those decisions and investments and business decisions. We don't really have any clarity on what healthcare is going to be, or is this the status going forward, and tax policy as well. And so it'd be nice to see some of that stuff clear up, and you might see some of that uncertainty go away. But overall, I'd say it's really too early to tell if the administration has had an impact on the economy at the current time.
Jim, the only other question that we had received prior that you haven't really touched on, and it's not your role as Deputy Commissioner to get into this area, but maybe you might just want to talk for a second. The question we received was, with the current unemployment rate very low, what is South Dakota doing to attract more people to work and live here? And I guess maybe if you want to just talk anecdotally about Department of Labor and Governor's Office of Economic Development, if you would care to do so.
Sure. Yeah, and that's a challenge we've had for many years in South Dakota, is being able to keep our brightest and best here and to recruit more people in our state, so we can build that workforce. Because we hear constantly is, I'd like to expand my business, but I don't have enough qualified people that I can hire. I don't know where to find them. And so, the governor's focused on that. There's been a lot of work in the workforce development area. One of the bigger things that have been done probably in the last couple of years is the Build Dakota Scholarship Program for in our 4 technical institutes. And so that was a partnership between T. Denny Sanford and the governor, put in, I think, $25 million each to fund some full ride scholarships for some of these really specific areas that are needed coming through the technical schools. And I think that funds like between 200 and 300 full ride scholarships a year. And so that's fairly new in the last couple of years. Department of Labor, they have their Dakota Roots program. I think that's been fairly successful over the years, where they're trying to recruit people to come back to South Dakota that have a South Dakota connection. And so those are a couple examples. It's, as the governor's mentioned before about workforce development, it's not a sprint, it's a marathon. And so we just got to keep working on it. I think we need to keep getting at the younger generation early in the process. I think business has got to get involved heavily in the schools early in the process and try and keep those kids to stay in South Dakota.
Very good. Any other closing comments, Jim? I don't believe we've received any other questions. Do you have any closing comments?
Nope. Thanks, Sean and Donna and the team at South Dakota Retailers. Certainly appreciate the opportunity to visit a little bit. And like I said, if somebody thinks of something, just drop an email or give a call, and be happy to visit, and appreciate the opportunity. So thank you.
Very good. Thank you, Jim. This webinar was recorded, and a link to the recording will be emailed to all of you late this afternoon. SDRA has several other webinars coming up, including a use tax webinar on September 21st. Use tax issues are the biggest problem area for businesses when the South Dakota Department of Revenue does audits, so that's a very important topic. We'll also have a series of labor law seminars coming up in September in Watertown, Sioux Falls, and Rapid City. They're a great opportunity to find out what your rights are and responsibilities as an employer. Visit our website at www.sdra.org for details. Thank you to everyone for participating in today's program. We hope you have a great day.